Hello guys, if you felt like recent price action was pretty much untradeable, the algorithm has changed, nothing works, I got you. I will today teach you what to do about it, how to trade harsh range market conditions, how to filter out trades and ranges, how to use ranges to find next trade opportunities. This is pretty easy mechanical approach you can use almost in every range, I would say in every range bound markets. It's easy to use with other strategies like ICT, other price action based strategies, so let's get into it. Alright, the first step is we need to be able to identify range as soon as possible. There are a couple ways to do that, and the first one is simply that after large expansion during first 30 minutes of the market, we usually get consolidation or very slow price action afterwards, especially if we take out both sides of liquidity. So in this case, as you can see, this depicts 9:30 opening. This depicts previous price action. Once price opens up at 9:30, we dump, pump, dump back down, and we simply taken out some two levels of liquidity on the upside and on the downside. Usually after this, price will stall, especially if the pump and dump was really aggressive, so we can anticipate ranging price action after such event. Another stupidly simple way to spot the ranges early is if we set a failure swing on the bottom and upper side of the market. So we basically fail to take out the recent low and recent high. You can spot it early, we don't need to wait for all of this movement. You can simply wait for like an order block to form at the top of the range after we created the failure swing here. And if also the speed of tape, so basically how fast price moves, slow down, you can easily anticipate that price might be stolen. This method has been around for decades, so now let's get into the last one. The last method is very similar to the first one. We expect a large range expansion overnight, and usually after large expansions during Asian session or London session, you will see how price just does some nasty price action during New York session, and usually it becomes better around PM, but AM session usually is horrible. We get some sort of expansion during 9:30 opening, like maybe first 15 minutes, but usually besides 9:30 candle, after large range expansion overnight, price becomes really disgusting to trade using trend following strategies. So I will use recent price action, this is 1 hour time frame, as an example. First of all, how would we spot, yes, this is higher time frame, but how would we spot range in price action here? As you can see, we did not manage to put in a new low on this move down. Once we confirmed that this went low, you could easily anticipate that the following price action will be rangy. So now what's the tool that we're gonna be using in order to anticipate how the price moves? As you've already seen from the thumbnail of the video, this is gonna be a volume profile. So what we're gonna do, let's start new replay. So what we're gonna do is use a previous range, it starts from here, and anchor it all the way down to here. Now you can see our discount and premium levels. They will change over time, so you will have to keep dragging this along the way as price forms, but you get a no area where you do not enter trades because it's pretty hard to understand what the price is gonna do around these levels, and discount and premium ranges. So what you're gonna be doing is looking for price to go above value area high in order to look for shorts, and below value area low in order to look for longs. Let's see how that would unfold over time. So as price moves, we need to keep dragging this with our price action. Here we go. As you can see, Here price tapped the value area high. Already on 1 minute time frame, you could have easily spotted this. This also aligns with higher time frame liquidity sweep and find almost 200 points short off of this level. Uh, so let's drop down to 1 minute, and as you can see, here we got a classic order block setup. It was pretty simple. We closed above this candle, then we closed below it. Some people also call it CSS, change in the state of delivery, whatever. The concept is basically the same. And as you can see, price respects this level. It gives pretty good reactions off of it. So how you trade around it? You wait for a lower time frame confirmations. Using concepts like IFVGs, order blocks, you can apply 2022 model. I will teach some of these models later on my channel. Definitely not 2022 model, but IFVG for sure. So this is just one example. Yes, it's in hindsight, but it's pretty easy to understand. It's pretty clear how you could have found a top of the range of this day using simple volume profile. So let's get into another example using lower time frames. Today was a pretty good example. This 6th March of 2026, and as you can see, once we already spotted the range, there is no need to try to forecast the range in markets. You can already see that on the chart. We simply plot the volume profile on an existing range, and as you can see, once we get above it, we stop looking for any sort of longs. And let's wait for any bearish confirmation. I will use this IFVG. Here we get the close. Now, what we gonna do? We wanna seek to close the trade either at the POC, point of control, or at the value area low. I highly recommend you to set at least your stop loss break even once we approach point of control, because it's pretty hard to forecast what the price will do when it touches it, because it can give pretty harsh reaction that you won't be able to even set your stop loss break even. It will go straight away to your stop loss. So I don't wanna enter into a trade because it will give some ugly beeping sound. And as you can see, this was a pretty quick one-to-one, and once you tapped a point of control, you see price rejected off of it. So now we continue to trail our volume profile along the way. Boom. As you can see, that's not my personal strategy, but if you were using order blocks or CSSs, as you can see, this candle closed below. Here we gave a pretty good close above it. We get internal sweep. Once we tap that candle back, you can enter into a long. Set once we get above this your stop loss break even, and either you would have gotten at some partial here, or you would just get stopped out break even. It all depends on your trade management. This is simply a filtering out technique that allows you to find better exits and entries using range in a range bound markets. And the last example from the thumbnail itself, as you can see, here's our 1 hour range. We simply plot volume profile on it. We get our point of control, value area high and value area low. Now we drop down to 1 minute time frame and we wait for 9:30 opening. Let's adjust our volume profile to the current candle, since the range hasn't been broken yet. As you can see, even the higher time frame volume profile gives us an incredible reaction. You could have found an entry here, but honestly the price moved so quickly that day that I don't think that anybody could really find a high probability entry off of that level. But later on we tapped the value area high and I managed to find a short here from here all the way down to here, almost 100 points. I will plot the screenshot of the trade being executed, and as you can see, the reaction followed. Alright guys, that was basically it for today. This is everything you need actually to trade ranges profitably. If you've been struggling in recent price action, you need to learn how to adapt, and this was pretty simple technique that you can use on a daily basis in range bound markets. Like, subscribe, and suggest new video ideas in the comment section. Peace.